Hello everyone, welcome to today's session. Good evening. So today we are going to continue our chapter number 2. Okay. So till now what we have done, we will do a revision, we will do a quick check and then we will proceed ahead. Okay. We started the chapter by understanding SA 240, the auditor's responsibility relating to a fraud in a financial statement. Over there, we discussed what is the auditor's responsibility, what we are required to do, when we are required to do, and what things are required to be included, presumed risk, risk with respect to management override of control, presumed risk of fraud in revenue recognition. So we understood those all things, and when we are required to do at the time of SA 315, at the time of SA 330, then testing of manual journal entries, that stuff we understood in SA 240. Then we came to SA 250. Now SA 250, considerations of laws and regulations required to look into. Sorry for the trouble. So what auditor is required to look into when it comes to the audit of a financial statement? Okay, when it comes to laws and regulations, what auditor is required to see from laws and regulations point of view? Direct laws and regulations having impact on the working of the entity, which fall under the category of other laws and regulations. So what auditor is required to do, like in case of a first that have a direct effect, we are required to take as a positive assurance kind of sufficient audit evidence that the compliance is there. For the second case, we are required to identify and we are required to perform some procedures wherein, okay, if something comes up as a non-compliance, then we will report, otherwise we will conclude that everything is complied, kind of a negative assurance. Okay, then how to do that? What if when we identify the non-compliance, what is we are required to do, how that will impact on your audit report, how it will impact on your audit opinion, that we understood. Then we discussed about SA 260, communication with those charged with governance. What are the points that we need to communicate? Responsibility, overall planned approach, observations, significant difficulties, matters, ethical requirement and independence, plus some additional requirement in case of listed entities. Okay, that we understood till now in respect of chapter number 2. If anyone has any doubt, please ask. Do not hesitate to ask. Please ask your doubts freely. Okay. Now, what we will do is we will continue the session from here, and we will start with a new standard that is relevant from the point of view of chapter number 2, which is the SA 299. Okay. Can anyone tell me the name of SA 299 if you have read already? If you guys have read already, can anyone tell me the name of SA 299?
Responsibility of joint auditors.
Okay, great, very good. Yes, responsibility of the joint auditors. Now tell me one thing, why do we need this particular standard? We have already other standards which talk about auditors responsibility. Then why we need a separate standard for joint audit?
To avoid any dispute between two auditors regarding the responsibility when it comes to breach of, misconduct or anything.
Yes, good, very good. Anyone else?
Sir, because of a big organization like Reliance, which has many subsidiaries, so it's not possible for a single auditor to audit a single organization. So that's why the audit has been divided into the many other auditors. That's why this standard is required.
Okay, great, yes. Defining the scope of joint audit, yes, very good. Good, Usha. Anyone else?
How to consider the observations and report it when the duties are bifurcated.
Yes, very good, Anila. Yes. So absolutely correctly said that in case of a joint audit, what is the responsibility of the joint auditor and how they are required to report on the matters, how they are required to do the audit. So that we will understand through this particular standard, and that's why it becomes imperative and necessary to understand that okay, when we are doing a joint audit, at that point in time, as an auditor, let's say as in my firm, what I'm required to do. So let's start with SA 299. Joint audit of a financial statement. Okay. Now, my first question is whether I'll give you an example and you tell me whether in that example this particular standard will be applicable or not. Okay. So let's say Mr. X was statutory auditor of ABC Limited. Mr. X appointed, okay, or Mr. X recommended to management, okay, for appointment of another branch auditor for their A branch. Management appointed Mr. Z as auditor of A branch. Okay. Hence, Mr. X decided that he will carry audit of all operations except A branch, which will be done by Mr. Z. Is this example or this scenario, is joint audit? So A branch is part of ABC Limited only, which is being audited by Mr. Z. Mr. Z will do the audit of A branch, like whatever operations are there for the A branch, whatever financials, expenses and everything is there. Rest will be performed by Mr. X. Now, is this the joint audit?
No.
No, sir.
Why? Because two auditors are there. They have bifurcated the audit of a particular company. Like all the branches will go with Mr. X except for A branch. A branch will be done by Mr. Z.
It's because joint audit of in case of joint audit, it means that joint audit of financial statement as a whole. Whereas here Mr. A is auditing only branch records, so he is not responsible for audit of financial statement.
Okay, good. Anyone else with any other answer?
The branches prepare standalone also, sir. As mentioned, it is financial statement, financials audit. If that portion of financial is bifurcated, then the joint auditor concept comes into picture.
Okay. Anyone? Anyone else? Correctly pointed out. So when we talk about joint audit of a financial statement, we are talking about the whole financial statement, not at the branch level, not at the subsidiary, joint venture or associates like of thing. Because here Mr. Z will issue opinion on the financial statement of branch, not on the whole company's financial statement. So he will not issue opinion on ABC's limited financial statement. Understand that. So if he will not issue, opinion on ABC limited, then he is not a joint auditor. At the end, what he will do is he will prepare the financial statement of a branch and he will give it to Mr. X. Mr. X will consider that report in the preparation of his financial statement for ABC Limited and then will issue the audit report in the name of Mr. X, not X and Z. That is a difference. So in case of a joint audit, the final report of the company is issued by two separate auditors. So you will see two separate names, okay, in the financial statements or in the audit report. That is joint audit, not the subsidiary or branch auditor, subsidiary auditor, joint venture auditor kind of thing. That's different relationship which is out of the purview of SA 299. Clear? Any doubt? Just let me see if I have an example to show you how the signatures are there, how the things is there in the audit report. Just give me a minute. I'll show you that one so that you guys can understand in much detail that okay, this is how it is reported. I would request everyone just not to focus on the name of the company. So I'm just showing you that okay, this is how joint auditors issue a common report. So we will understand what is the common audit report and what is the separate audit report at a later point in time today itself. But just this is the example of a common audit report that both the joint auditor issued together. Okay. So this is the audit report of a particular company. Okay, this is taken from the public domain, so nothing confidential data is there. So this is the audit report. If you can see, independent auditor's report. And if I go below, look at the two different firms are there who has issued the audit report and they both are signing the audit report. Not the one particular auditor, like in our example, Mr. X. Here, the audit report is signed by two different auditors, two different partners of those firms. And even when I talk about auditor's responsibility, they specify that okay, in case of auditor's responsibility, when there is a joint audit, they specify that okay, this is the auditor's responsibility. I'll just show you. I think there's some technical issue. It's not moving. Just give me a minute. Okay, but this is how the joint audit report looks like. Okay, so when two auditors issued the report. Now, let's understand further that okay, when the joint audit report happens, what auditors are required to do. So let's say tomorrow you are going to start one audit with your friend. Your friend is a chartered accountant in practice. Okay, you and your friend are going to start an audit of a particular company. What things you will discuss or what things you will decide at the first, or what will be the first discussion point between you?
Scope.
Okay, scope. Anyone else?
Division of work among the auditors.
Okay, yes, good. Division of work.
Signing of financials.
Okay, signing of financials.
Strategy and audit planning also.
Joint responsibilities in the case of work is not divided among them.
Okay. Okay. Anything else? anything else you guys would discuss?
Is that company appointed them, sir, or these two are coming together to audit?
Uh, Sorry. Is, so you are saying that scope of work, correct? Means
No, sir, I just means clarification in your question whether the company appoints these two as a joint auditor or the friends will come to audit together.
no. Company appoint. So at the end, it is the appointment which is done by the company. At the end, the company has to, appoint both of them. Just give me a minute, I think. So company has to appoint both of them. Then only it will be joint audit. Just give me a minute. I think there is some issue at my end. Apologies for that. Okay. There was some network issue at my end, I think. Apologies for that. Okay. So we were discussing about so we were discussing about joint audit. Like, okay, what are the things that we will discuss when we start the joint audit or when the company appoints two chartered accountant in practice as a joint auditor? Okay. So the first thing is not the scope of work that we discuss. We might we got some answers that okay, the scope of work is something that we discussed first. Answer is no, not the scope of work. Okay, so we discuss the team, we discuss the overall audit strategy first, the time, the resources required, okay, how we will be conducting the audit. Scope comes once you decide the overall audit strategy. once you decide the overall audit strategy, okay, what time we will be taking. Let's say today I'm starting a joint audit with, Mr. X. Mr. X is saying, okay, we will complete audit by 30th September. I said, no, I need to complete audit by 31st August because I'm not available in September. Now, Mr. X is not ready to complete it by 31st of August. How will you do that in that case? Scope is a secondary thing, but nature, timing and extent, the overall audit strategy, the plan in detail, that we need to discuss first. Okay, so first thing is we need to understand that what are the points, what are the things that we need to discuss, we need to take care, we need to look into before we step into a joint audit or when we step into a joint audit. Okay, so again we will start that, okay, the areas or what to look about, or you can say what to discuss. Hello everyone. Apologies for the technical issue. Okay, so let's continue the discussion. I hope I'm audible and visible now. Okay, the screen is visible to you. If no, then do let me know that okay at any point in time if you face any issue. Okay, clear. Good. So we were discussing about the things that as an auditor we are required to discuss, we are required to finalize when we enter into a joint audit. Let's say today, like there are two firms, ABC and company, XYZ and company. They both are being appointed as a joint auditor by a limited company. In that case, who will sign the report? Who will be the engagement partner? Who will be the point of contact for both of the firms? All these things are required to be discussed. Before you discuss the scope of work, first you need to identify who is in front of you. Okay, when the person is your friend, you know him, that's another story. But at times there are two different professional firms involved. Okay, and in that case, it becomes very necessary to understand, okay, whom to contact, who is the other joint auditor in this case, okay, who is going to sign, who will be the team member, who are going to be key team members over there. So the first thing that is required to be understood is the engagement partner and other team members. Okay, the engagement partners, other key members of the engagement team of each of the joint auditor. So engagement partner, of joint auditors. That is the first thing we need to understand. Then the second thing we need to understand is that joint auditors are required to establish overall strategy. I cannot say that okay, I need to finish the audit by 31st July and another joint auditor will say no, we need to finish by 31st August. So there will be a disconnect between both of them. If I want to complete the audit by 31st July, I want to issue the audit by 31st July. If the other joint auditor is not ready, can I say, okay, you issue on 31st August, I will issue on 31st July? Answer is no. What time is required to be put into, how the audit will be planned, what are the objectives? So objectives are already decided, but how to achieve that objectives within the given time, within the given resource, that is the overall audit strategy. Okay, so joint auditors are required to establish audit strategy, overall audit strategy. See, when I talk about overall audit strategy, at times it is very important because these things decide the scoping, the timing, okay, the direction of the audit. I'll just give you one example, and that is the example that has really happened. That when a joint audit was happening, one of the joint auditor was of the opinion that we will not rely on the IT systems, rather we will adopt an approach that is more on the testing and less reliance on the IT controls. Another joint auditor was of the different opinion that no, we have to rely more on the IT controls. So we will do an analysis of our IT controls, IT environment, and accordingly we will assess what additional work is required to do or is required to be done in order to obtain sufficient and appropriate audit evidence. Okay, so if you see on this particular part, like one is saying we will not look into IT, another saying we will look into the IT. Now with this difference of opinion, they cannot proceed further, because if let's say one says I will not look into the IT and I will do the testing without consideration of the IT, then he might have to test additionally, he might have to test more to gain more evidence, to gather more evidence to express the opinion. But on the other hand, the another joint auditor saying, okay, I will rely on the IT. And even for the company also, like one joint auditor is saying we will not rely on the IT, another is saying yes, so they will provide the information to one auditor but not to another. these disconnects are very, very, what you can say, problematic when they happen. So it's always preferable to first decide the overall strategy. Okay, how we will move into in the audit, and then going on to the scope and other areas. Okay, based on the strategy, I will decide my audit plan. Based on the strategy, I will decide my audit plan. Now, audit plan is something, in detail that I will decide, which will identify certain things. Okay. And as an auditor, I have to make my audit plan in detail, extensive, to cover all the things. Now, let's say, for example, two joint auditors are there. One decided I will take care for the balance sheet items. Another said I will take care for the P&L items. Fine, division done. They started the audit. Later on, they identified there are some disclosures which are neither related to the balance sheet, neither related to the P&L. There are some additional disclosures, additional reporting requirements which are under the law. Now, what is required to be done for that? Who will be responsible for those areas? You guys tell me. Areas which are not discussed. So one decided P&L, one decided balance sheet, and after that, they started the audit, but realized later on that, okay, now no one covered the disclosures. Who is responsible for those areas?
Both.
Anyone?
All of the joint auditors.
Yes, absolutely correct. So in that case, all of the auditors, okay, they are responsible for the common audit areas. Now these are known as the common audit areas, okay, where all the auditors are responsible for that. And there are certain areas which are divided among themselves, and those are the separate audit areas or divided audit areas, we call it. Okay, so audit plan will provide you division of the audit areas plus common audit areas. Plus common audit areas. We will come again back on the common audit areas because there is something more we will discuss. Okay, but let's now understand the division of the areas. Now, once they will divide the areas, who is responsible to communicate to management about the division of work? We just now discussed before this, in last lecture, SA 260, communicate the overall plan and approach of the audit. Who will discuss? Who will report to management, or who will, communicate to management?
They both together with communicated with the statutory government.
So they both are required to issue one communication letter, two different letters. How they are required to communicate?
The different letters.
Different letters. Okay. Anyone? Both. Okay. One. Okay. Yogesh, great.
Different, sir.
Different. Okay. Good. Okay. So when it comes to the communication to the management, now two different communications usually should be avoided in respect of same topic. So for example, one auditor issues one which may contain partial information, another auditor issues another communication which may include partial information, and that will create a problem for the management. That's why it's always necessary to ascertain the reporting requirements. So again, in the division of the areas, we don't only divide the scope of work, we also divide other reporting objectives, other things which are incidental to the audit engagement. Okay, so division of the areas is not only about testing, but other things related to engagement. And as a result, both of the joint auditors have to ascertain the reporting objectives, who will report what. Okay, so that a partial reporting should not be done. I will ascertain the reporting objectives, which will include the communication to management and those charged with governance, including the timing of the communications. Let's say, for example, I did the communication at the start of the audit. As I discussed in the last lecture also, that communication is a continuous process. It's not the start, it's not the end, it's not in the between, throughout the audit. So they are required to ascertain the time and the content together. Okay, now scope is done, okay, and strategy is done, communication requirement is done, okay. What else do you think the joint auditors are required to discuss? Anything you might think, okay, this is something the joint auditors should discuss?
Audit fees.
Audit fees, okay. Anyone else?
The geographical area location.
That comes under kind of scope of audit only, like audit plan, like who will test what. Even if there is a bifurcation in the geographical procedure, area wise, that is fine, that will be covered under the audit plan. So division of audit areas. Anyone else?
Sir, can you repeat your question that you have asked?
So I'm saying, apart from discussing the audit areas, apart from discussing what we discussed now, strategy, engagement team, what joint auditors are required to discuss within themselves?
During conducting their part of audit, if they identify any kind of material subject or risk of materiality they have identified, they should discuss that thing with each other.
Very good, Pooja. Yes, absolutely correct. So when we do, okay, I got my audit areas. Now the next step is I will perform risk assessment. What I will do is I'll go and check, okay, how much testing I'm required to perform in those areas. So once I will perform the risk assessment on those areas, I may identify fraud risk, I may identify risk of material misstatement, I may identify some areas as a significant risk. Let's say, I'll give you an example. Okay, so as I said, the division of the work, hypothetical division of the work. So sales was with me, but receivable testing was someone else, like another joint auditor. When I tested, or when I did the risk assessment, okay, at the time of my planning to understand the sales, I identified that I have a doubt on the completeness assertion of the sales. I have a doubt. I think there is a high risk with respect to completeness of the sales. Now, do you think that will impact the trade receivables? Yes or no? Yes or no? If I have a issue on the completeness assertions of the sales that is recorded in the books of account, do you think it will impact the trade receivables? Good, Yogesh? Yes or no, guys? Okay, good
Yes,
Hemant.
sir.
Okay, great Pooja. So if that is going to impact the trade receivables, then it is my duty to inform the other joint auditor that in your area that you are going to test, or you are going to plan and do the testing and gather sufficient audit evidence about that. In that area there is something that I think is of high risk. So whenever I will perform risk analysis and risk assessment, I need to communicate to other joint auditors the risk of material misstatement. And when I say risk of material misstatement, that includes my fraud risk or any item that is classified as a significant risk, whether it pertains to overall financial statement or it pertains to some other area which is at the financial statement level. Clear? Any doubt? Any doubt till now? No? Okay. Now, one thing I purposefully did not discuss at the start, okay, which was very crucial, and that is, tell me one thing, that when we are appointed as an auditor, we receive or we get engagement letter, finalized terms of the engagement, and the client signs the engagement letter along with us. In the case of a joint audit, what do you think? It will be a separate engagement letter for both of the auditors, or a common engagement letter for both of the auditors? What will be the scenario? Okay, Yogesh, good. And if you, whatever answer you are giving, just tell me the reason why do you think it is the answer, along with the reason. Okay, Hemant, good. But the reason why? Why do you think this should be the answer? When the auditors are being appointed, they should be given common engagement letter or a separate engagement letter. Come on.
Sir, it can be both common as well as separate.
Okay. Anyone else? Anyone? Okay, Yogesh, very good. What do you think? A common engagement letter or separate engagement letter, or both? Very important to understand. Trust me, because this will enhance your understanding about the topic, why these requirements are there. Okay, so I'll tell you. The auditors are required to obtain common engagement letter. Only common engagement letter. There should not be separate engagement letters. I'll tell you why. Because in the engagement letter there are terms and conditions, okay, that we finalize as per SA 210. What if you have a different terms than I have? What if in the terms something additional is specified in your engagement letter which is not specified in mine, how can I ensure that? Till the time, or when there are separate engagement letter, or let's say I just showed you an example with the 2 joint auditors. There are certain scenarios where you have a 3 or 4 joint auditors. How will you ensure that each and every joint auditor has received same engagement letter with the same terms? Or even how will you ensure how many joint auditors are there if you have different engagement letters being given to each joint auditor? Unless and until management comes you and tell you, okay, we have issued this issued engagement letter to this auditor. But again, that is problematic because you cannot compare the terms. That's why a common engagement letter should be there. Okay, now I'll give you one example. We'll discuss one example, okay, and then we will discuss, okay, what should be done in this scenario. Mr. A and B are joint auditors, okay. Mr. A is looking after revenue and assets. Mr. B is looking after your liabilities and purchases, or I'll write as an expenses. Okay. Mr. B demanded a management representation letter for specific liabilities and expense areas. Comment. So Mr. B has demanded separate management representation letter for the liabilities and expenses areas. So whatever representations are required in those areas, for that Mr. B said, okay, give me a separate management representation letter. What do you think? Is it appropriate? Yes, no, with reason.
If joint auditors have decided for the areas of work, they will be responsible for all the procedure that is related to that specific work area. May it be starting from the obtaining information and any coordination throughout the audit process of that one particular area. So this is right in this present case.
Okay. Anyone else?
Yes, sir, it is correct.
Okay, good. Someone with a different answer? Anyone with a different answer? No? Okay. So in this particular scenario, they are, as I told you, that sometimes it is necessary to understand what information is provided to others. That's why having a separate management representation letter is not appropriate. In this scenario also, we would require a common management representation letter, not a separate. I'll tell you the reason. Let's say, in one of the representation letter, management which gave to one of the only auditor, not to other auditor. So management confirmed that, okay, there is no fraud. there is nothing in the revenue area, everything is perfectly fine, but later on I identified a fraud. How much credible the management representation letter is in that scenario? Zero. No credibility of that management representation letter then. That's why wherever the management then will give a representation letter, we should be aware that okay, management is also providing the letter here, and but we should not be relying on that, because now the credibility of that is zero, and that only you will only come to know that when there is a common representation letter that has been given to both of the joint auditors. If something is only given to one of the joint auditor, you will never come to know unless and until that joint auditor communicates to you. So to avoid these kind of scenarios where you have a doubt on the representation letter or the representation by the management, or some important representations given only to a particular auditor but not to another. So to avoid these kind of scenarios, it is always required that management should issue the common representation letter, not the separate. Correct, Sumit. So all joint auditors should be aware, okay, what representations have been, we have received from the management. Clear? Any doubt till now? Any doubt? No? Okay. Now, there are certain areas in the audit of a financial statement that we need to understand who is responsible. Even though when there is a allocation, when there is no allocation, so there are some specific areas that we need to discuss. Okay. So we discuss there is a division of audit areas for which the specific joint auditor will be responsible. So for the work allocated to such joint auditor, they will be responsible. But for the common areas, so joint auditors are jointly and severally responsible for the common audit areas. Now we need to understand which will fall under which category. Okay, and with an example also we will discuss. Whole financial statements. Whole financial statement. Now tell me, when a joint auditor, okay, is doing the work, then doing the testing and everything, and another joint auditor has performed his areas. So they are equally responsible for their areas which they have divided amongst themselves. But who is responsible in case for the whole financial statements?
They all are responsible.
Like whether the financial statements are as per the Ind AS or AS, whether the financial statement are appearing fine. So let's say I saw my revenue side and I was fine, okay, this is revenue, done. Someone else saw the expense. What about profit? What about the EPS, or what about other things that are there in the financial statement? So as an overall financial statement, who is responsible?
So these are common areas and all will be responsible.
But see, I'm talking about whole financial statement, like P&L, balance sheet, everything. How can I divide whole financial statement? Like, okay, you look whole financial statement, I will not look. Like, division is possible at the line items level, but not at the overall financial statement level. Because when the auditor is signing the report, audit report, he is signing on the overall financial statement, not at the line item level. Even I showed you the opinion over there. There is nothing like, okay, what was the division of work? So Mr. A is responsible only for the revenue or Mr. B is responsible for the expense. They never write in that in audit report. So when it comes to the compliance with the relevant laws and regulations, compliance with relevant statute, or when it comes to the compliance with your gap, it may be Ind AS, it may be accounting standards, or compliance with your applicable financial reporting framework. Okay, applicable financial reporting framework. So what is the applicable financial reporting framework for a private limited company? Can anyone tell me? Private limited company, applicable financial reporting framework.
Accounting standard.
Okay, good. Anyone else? Applicable financial reporting framework for private limited companies. Come on guys, pretty easy.
The general purpose financial statement.
Okay. Simple question. What is the applicable financial reporting framework to a private limited company in India?
Sir, it may depend upon whether there are Ind AS or AS is applicable to them. As per that concept, they will be following their respective framework.
So, okay, let's say AS is there then.
Section 133 of the company.
Hmm?
Section 133 of
Sir,
the company.
Schedule 3 of the Companies Act.
Yes, very good. So, when I talk about applicable financial reporting framework, I'm not only talking about the Indian accounting standards disclosure part or presentation or disclosure part, but I'm also talking about Schedule 3. That is my reporting framework that is applicable to me under Companies Act. So that's why I say private limited company. It will be Division 1, Division 2 of the Schedule 3. Okay, or some if any other reporting requirement there in the Companies Act. So basically Companies Act decides my reporting requirement. So compliance with the applicable financial reporting framework is also area where the joint auditors are responsible jointly and severally. Clear? Any doubt till now? Any doubt? Okay. Now very important part that I want to discuss, okay, is audit report. Or you can say audit conclusion or reporting. Now tell me, we discussed about engagement letters, we discussed about management representations letters. What do you think? I also showed you one example. Is it necessary to issue one single audit report?
No, sir.
Okay, Yogesh, good, good. Anyone?
Sir, it is
It is
not
not.
Yes, Jenny.
Sir, it is not necessary to issue one common audit report as if among all the joint auditors, anyone has different view that he want to modify his opinion or any other opinion, then he can issue his own audit report apart from the others.
Okay, good. Anyone else with a different answer? Okay, I'll give in detail. Let's say there are 4 joint auditors: Mr. A, Mr. B, Mr. C, and Mr. D. A, B, C, D. There are 4 joint auditors. These are joint auditors. Mr. A wants to issue unmodified opinion. Mr. B wants to issue modified opinion. Mr. C and D, they both are into unmodified opinion. Now the majority over here, A, C and D, the majority says the unmodified opinion. But Mr. B has an view that it should be modified opinion. Should they go with the majority?
No, sir.
Okay, good Hemant, good Yogesh.
Then Mr. B should issue his audit report with the modified opinion.
Okay, so Mr. B should issue audit report with the modified opinion. Now I'll add here one more thing. Mr. C and D are saying modified opinion with EOM paragraph, which is not present in other audit reports. So Mr. C and D are saying that okay, it should be a part of the modification or the qualification should be part of EOM paragraph, not as a modification. Mr. B is saying that no, this should be based on this, there should be a modified opinion that should come into modification. Now we have a 3 different opinion. Should we issue 3 different reports?
Yes, sir. 3 different.
They can issue different audit reports with having a reference to other auditors' audit report.
Okay. Anyone else? And where do you make that reference?
Under the heading other matter paragraph.
Very good, Pooja. Yes, very good. So, absolutely correct. If there are multiple disagreements and they want to issue a different audit report, perfectly fine. Issue separate audit report. So, in case of the audit report, common audit report plus separate audit report plus separate audit report, both can be issued. When I say common, let's say for example, C and D are saying okay, they are agreeing together to the EOM paragraph. I will term this as a common audit report. And B will issue a separate audit report and Mr. A will issue a separate audit report. But the point will be that there should be a reference to the separate audit report issued by other auditors, or there should be a reference in the common audit report for the separate audit report. So referencing is necessary. So separate audit report with reference. Okay, with reference. There should be a reference that okay, that should point out okay, like there is separate audit opinion also, you should consider that. And that separate audit opinion and the reference is required to be highlighted under other matter paragraphs. Under other matter para, okay, as per SA 706. Clear? Any doubt with this? Any doubt? Okay, good. Now, another area that I want to discuss is with respect to the completeness or with respect to the comfort that we need to obtain. Okay, and that is part of the audit report. Okay, one auditor is there who is looking after the expense and the liability side. I'm taking care of the revenue and what you can say, asset side. Now, I am not sure what audit procedures have been performed on the expense or liability side. Am I required to review the work performed by that joint auditor before I sign the audit report?
No, sir, if the separate audit report is issued, then that auditor will always be responsible.
But if there is a common audit report, like he's saying unmodified opinion, I am agree with the unmodified opinion, but am I required to review his work before I sign on the unmodified opinion?
Joint
Yes,
auditors
no?
did not necessarily review work performed by others, because they can rely on that auditor that he has performed all his procedures in accordance with the standards whichever are applicable, and he has done their work with due professional competency and due care.
Very good. Anyone else with a different answer? Okay, absolutely correct. Correctly said that yes, when a work is performed by a joint auditor as per the standards on auditing issued by the institute, in that case I am not required to review the work performed by that joint auditor. Okay, I will assume that the work has been performed in accordance with the standards. So I will assume that the other joint auditor, okay, has performed the work that was required to be performed by that joint auditor. I will not go and review his work. Neither he will review my work. Yes, in my team or in my engagement team, whosoever will be there. Let's say for example, if there is a manager, so whatever manager will do, I will review that work. So review and approval or review of the work will be there within my team itself. That is perfectly fine. Okay, that is required also. But whether a work will be reviewed by another joint auditor for the first joint auditor, answer is no. So one joint auditor is not required, okay, or it is not necessary for a joint auditor to review the work performed by another joint auditor. Simple, it is not necessary. Any doubt? Any doubt till now? Any doubt, guys? So there is one question. Is there any audit report in reality, for example, which have a different audit report? Like you mean to say a separate audit report has been issued? Very few examples are there, but I haven't came across, or I don't have currently one example for that. But yes, there are scenarios where you have a separate audit report and a common audit report. Okay. Good. If no doubts, this was the SA 299 with respect to the joint audit. Okay, joint audit in case of a financial, in case of audit of a financial statement. Now, what we will do is quickly we will go through the section of SA 299 from the module. Okay, and we will see how it is given over there, so that when you are reading from the module or study material, you are able to understand whatever we have discussed. So it will also provide you a good understanding of the study mat, and it will keep things refreshed, or you will be able to understand very quickly. So in a study mat, you need to come to the page number 2.35. So it is the page number 2.35, where point number 5 is SA 299 joint audit of financial statement. Okay. Now again, it provides that, okay, what are the things or how the joint audit is there and when it is not applicable. So remember we discussed about the branch, division, subsidiary, joint venture, associates, other entity. In those scenario, SA 299 is not applicable. Okay, that we discussed, and it explains what is the joint audit of financial statement. Again, the objectives is lay down the broad principles that we discussed, not only the scope of the work, but planning, overall strategy, identification of the team. Okay, then uniform approach that we need to adopt as a joint auditor, areas of the work, and identify individual responsibility. Now, as I said, we need to do audit planning, risk assessment, allocation of the work when it comes to the start of the joint audit. Okay, like who are the team members involved, engagement team involved in the joint audit, including the engagement partner. So first understand who is the engagement partner, engagement team, and other team members. Okay, then the division of the area, overall audit strategy that we discussed to set the scope, timing, and direction of the audit, very important part. Then you have a reporting objectives, including the communication part. You have a communication among the joint auditors of factors identified. Okay, timing and extent of resources. Okay. Now, then nature, timing, extent of the audit procedures, identification of the allocation of the work, responsibility and coordination that we discussed. Like, okay, if the work is divided among themselves, so they will be responsible. But if there is a common area, then for common area they are responsible jointly and severally. Okay, these are the common areas, like not divided. Okay, common audit areas. Anything which is brought to the notice of joint auditors, like if they communicate with each other about some fraud, then they all are responsible for that. Financial statement, when it comes to compliance with the statute, compliance with the reporting framework, or compliance with the relevant pronouncement issued by the ICAI. Applicable, like with respect to standards on auditing. Then in your study material about the particular topic, SA 299. Okay, so we discussed about the joint auditor's responsibility. Last is the communication with those charges material about SA 299. Let's do one thing. Let's take a quick 5 minute or 5 to 7 minutes break, so that I will also issue and we will gather back after the break. Okay, let's take a quick 5 to 7 minute break. Yeah. आवाज नहीं आ रहा सर मेरा? Hello everyone, welcome back. Apologies for the long break and due to the system issues. Okay, let's continue the session. So we discussed this particular part. We discussed from the module that how SA 299 is there. Any doubts till now? Any doubts to that?
Sir, I have a doubt.
Yes.
Sir, at the time of initial starting of the audit, we said that joint auditors get engagement letter, which is common. So these joint auditors are whether do we have a choice that who is going to be our joint auditor, or it is that that management tell us.
Okay, I'll tell you. Now, usually what happens is appointment of the auditor is done by the company itself. So company is the one who decides that to whom they want to appoint as an auditor. So they may decide, okay, today we want to appoint Mr. X and Mr. Y as a joint auditor. Or next year may they decide, okay, Mr. A and Mr. Y should be the joint auditor. So the appointment of the auditor is with the company, and they usually, that happens in the general meeting. So as an auditor, we don't have a choice that who will be the joint auditor with us.
Sir, if that other joint auditor is our relative or any related party to us, then can we continue that engagement?
See, if that other joint auditor is a related party, okay, in that case, like, can you explain like which related party you are referring as a network firm part of?
Maybe network firm or my friend circle or something, the
See,
person whom I know.
yeah, that is perfectly fine. See, you may know the other joint auditor. You might have worked in some other previous assignment. That is fine. But if there is a conflict of interest, okay, let's say for example, if there is such a kind of conflict of interest that is it's going to impact the opinion, in that case, you may highlight in advance itself that okay, there is a issue to the compliance with the fundamental principles. But if he's a friend, if you know him in the professional circle or something like that, it may not impact because you are also going to audit as per the standards, he's also going to audit as per the standards. It's not like that, okay, one person is doing accounting and I know him and he's appointing me as an auditor, so I will review his work. No, you both will be jointly and severally responsible for whatever work you will be performed. So I don't think so that will be an issue. Am I clear?
Yes, sir, clear.
Any other doubt, guys? Any other doubts? Or something you might have felt that okay, it was because of some system issue or the technical issues you did not get it appropriately. Any doubts with respect to that? Any area? Nope. Okay. If no further doubts, then let's proceed the discussion. Okay. I have a few questions that we will be discussing and solving so that we can understand easily and we can understand the topic in much more detail. Okay, let's understand that. Okay, so this is very good question that I'm going to discuss now, that is on the joint audit point of view, and it's a combinations of questions that we will be solving. Okay, so the question is KP and Associates, MNO and Company and PKP and Company were appointed joint auditors of Anand Sanand Limited for financial year 22-23. Before starting the audit engagement teams of all the three audit firms got together to discuss the approach for the audit. Mr. Manoj, audit manager at an M&O and company, suggested to start the audit and gradually decide the allocation of division of work. Mr. Prakash, the audit manager at KP and Associates, agreed to that and suggested that they should start by taking one area each from the balance sheet, like long-term liabilities, fixed asset, investment respectively. Mr. Kripal, audit manager at PKP and company, had a different opinion. As per him, the audit team should decide on the entire division of the work before start of the audit. To that, Mr. Manoj and Prakash presented their thoughts that the entire division of the work before start of the audit will take much time and creating a delay in starting the audit. Okay, so there is a disconnect with respect to whether they should do the allocation work fully at the start of the audit or gradually as and when they progress to the audit. Okay, now let's discuss question number 1 with respect to this part. Mr. Kripal has reached out to you to understand the correct approach with respect to a developing joint audit plan. Now you tell me whether they are required to develop a joint audit plan fully at the start or one by one as and when they grow into the process. So fully they should finalize the scope of the work at the start of the audit or gradually as they progress the audit. Anyone? Okay, Yogesh, good, very good. Whether they are required to finalize the full audit plan at the start or they are required to first start the audit and then gradually develop the audit plan. Come on guys. Pretty important question because that will help you to understand the concepts. Okay, Vignesh, very good. Anyone else with a different answer? Very good, Ginny. Yes. Okay. So usually what happens is, when it comes to the audit, joint auditors are required to discuss the audit plan, okay, and develop a joint audit plan prior commencement of the audit. Prior commencement of the audit, not at the later stage. So in the current case itself also, creating the audit plan later on or throughout the audit is not a correct approach. It should be prior to the commencement of the audit. Okay. So if someone says, no, we will develop the audit plan gradually as the audit progress, no. As a joint auditor, it should be prior to the commencement of the audit. Okay. So let us see further question. Also, Mr. Manoj suggested that when the division of the work will be finalized at later stages of the audit, The team should finalize their nature, timing and extent of the resources necessary to perform the engagement. Until the division of work is not complete, it is difficult to estimate the resource requirement, and Mr. Prakash agreed to the same, but Mr. Kripal was in disagreement. So what do you think? When they are required to finalize the nature, timing and extent of resources required? Once everything get finalized, after that, or at the start of the audit? So for the plan, we discussed at the prior commencement to the audit. But what about nature, timing and extent of the resources required? Anyone? Okay, Jeannie. Okay, Hemant, very good. Anyone else?
Allocation of work should be performed at the starting of the audit, and after that they should have a properly documentation of the division of their areas of work. That will help them to decide their nature, timing, extent of resources that are necessary to perform the engagement.
Very good, Pooja. Yes. So when I say developing the joint audit plan, after the plan, immediately you have to divide and you have to decide on the division of the areas and the nature, timing and extent of the resources that are required. So you need to decide the nature, timing and resource at the time of developing the joint plan itself, not at the later stage. So this is also will be at the time of development of joint audit plan. Okay. Then let us see the question further. Mr. Manoj suggested that irrespective of the work allocation and division, each joint auditor shall be responsible for the work performed by other joint auditors, and hence all audit teams will review the work performed by other audit teams. Once a full review of the work is completed, then the audit teams will issue their separate audit report. To this, all audit team except for Mr. Kripal agreed. Now tell me, what is the issue over here?
They are having issue with the responsibility that they have with the overall audit areas, and about reporting also, because when work is allocated, each work that is performed by other joint auditor, he is solely responsible for that area, but the areas which are not divided amongst them, they are jointly and severally responsible for those areas, and other joint auditors works performed is not necessary to be reviewed by other joint auditors. So they can issue common joint audit report if they don't have any disagreement between them. But they can issue their separate reports with having their reference to the other auditor's report's opinion.
Very good. Very good. Absolutely correct. So when it comes to the allocation of the work, if there is work allocated, okay, then for that particular division, the respective joint auditor will be responsible. So when they say irrespective of the work allocation, okay, each joint auditor shall be responsible, that is wrong. That is not correct. So the respective joint auditor will be responsible for his work, and audit teams will review the work performed by other audit teams. That is also wrong. That they are not required to review. It is not necessary to review. And the last one is separate audit report. No, if there is a disagreement, then only separate audit report. Otherwise, you need to issue common audit report. So, in this case, Manoj and the other audit teams that have an opinion to issue separate audit reports is incorrect. Mr. Kripal is correct in this scenario. Clear? Any doubt? Any doubt? Okay, if no further doubts, I think we have a now good clarity on the topic of SA 299, that's a joint audit. Now let us proceed to the next topic for today that I want to take it up is SA 402. Okay, if you go to your study material also, on page number 2.40 there is a SA 402, that is the audit consideration relating to an entity using service organization. Now before we discuss SA 402, can anyone tell me when this is applicable? When SA 402 is applicable?
When the entity is outsourcing its work to the third party, then the auditor has to check the third party's processes also.
Okay. Anyone else?
Outsourcing of the nature which is impacting the financial reporting also, that we have to consider here.
Okay. Anyone else would like to add something more to this? Anyone? Something more to SA when SA 402 is applicable? Okay. So let me explain now. So you guys have correctly pointed out with respect to the applicability of the SA 402. So it is applicable when an entity is using a service organization, means when they have outsourced some of its function, okay, to another entity or to another organization. Now here the services that are provided by the service organization, when it is relevant from the audit of the user entity's financial statement. So if I am auditing a particular entity's financial statement and the services which is provided by the third party are relevant from that point of view, then this will be applicable. Okay. For example, tax function. So some of them, they outsource the tax functions completely or compliance with the tax laws. Maybe GST, maybe direct tax. Some of them may, outsource, payroll related function to someone else. In that case also it is applicable. So in all those scenarios, SA 402 will be applicable. So you can say it is an auditor's responsibility to gather sufficient and appropriate audit evidence regarding the functions which are being performed at the third party level. Okay, so that's why SA 402 falls under the chapter 2, that's the auditor's responsibility. So SA 402, auditor's considerations relating to an entity using service organization. Okay. Now there are few terms, before we proceed, there are few terms that we need to understand with respect to this SA. Okay. For example, we need to first understand what is type 1, type 2 report. Can anyone tell me what is type 1 report if they have read something before? Anyone?
So when the auditor is checking the operating efficiency and effectiveness, then the type 1 report. will be issued.
Okay. Anyone else? Anyone? No? Okay. So type 1 report basically deals with the scenario. Type 1 report basically is, applicable with respect to description. Okay, a report which covers a description of the service organization system and controls. Okay, and there is a report by the service auditor, in that case, providing, okay, the systems and the service organization's controls, and the design of the control is appropriate. Now you would think, why we need a report from service organization, or why we need type 1 report. Okay, and that we will understand with an example. So that will not only enhance your understanding about the SA 402's applicability, but also will enhance the understanding about your, you can say, type 1 report. Let's say there is an entity, ABC Private Limited, or ABC Limited basically. Okay, this is the entity ABC Limited. So ABC Limited has outsourced tax functions to XYZ Private Limited. Okay, whatever data, or rather than tax, I will just change here it. Payroll calculation. Let's say payroll calculation. So whatever data / calculation performed by XYZ Private Limited, that is rechecked and reperformed at ABC Limited. After reperformance, the entries are posted. Now tell me, in this whole scenario, whether this SA 402 will be applicable. So do you think SA 402 will be applicable in this whole scenario? Yes or no with the answer. Yes or no
Yes,
with
sir.
the answer.
Yes, sir, it is applicable.
And the reason?
Since the ABC Limited has outsourced this payroll function.
That's why this SA 402 will be applicable. Okay. Anyone else? Anyone? Okay, Hemant, very good. Someone else would like to add to the answer? No? Okay. Now, in this scenario, I may choose not to apply SA 402. So, I would say SA 402 will not be applicable. Understand the reason why. When I talk about audit consideration, when entity is using service organization, in this case, although they have outsourced, but the same is rechecked and reperformed. So the meaning of outsource here is not relevant because everything is rechecked and reperformed by the ABC Private Limited. So if I remove the work performed by XYZ Private Limited, everything is being reperformed and rechecked by ABC Limited. Hence, none of the transactions of XYZ Private Limited are getting or impacting the financial statement of ABC Limited, because again, whatever work was performed, ABC is reperforming. So controls, performance, system, process is already there in the ABC. Whether they are performing for the first time or second time or reperformance, doesn't matter because they are performing. If the control systems are already there in the ABC Limited, why I will go to a service organization and will say, okay, give me the list of your controls, when they don't even matter to me because the same controls are already there in the ABC Limited. For example, payroll. So they have some controls at the XYZ Private Limited. Okay, this is, someone will prepare the payroll data and someone will check. Maker checker control. Okay, maker checker element in the control. Now, if that same maker checker control is being implemented at the ABC Limited, again, for XYZ reasons, I'm not going into the reasons, then in that case, I would rely on the control which is there in the ABC rather than relying on the control which is there on the third party. Understand the point here for this particular essay. When some of the activities are not performed in your organization but performed at the third party level, and if there are certain controls and processes that are being performed at the third party level which are relevant from your financial statement point of view, which are relevant for the classes of the transactions that the user entity operations are related, or information technology systems is related at the user entity level, or accounting records at the user entity level. Okay, if those processes, controls, or some of the activities which are being performed at the third party level are impacting the user entity, then only this essay is relevant for me. Are you getting my point? So if you see, SA 402 specifically says when these is is required to be looked into, and that is the table given at page number 2.41. Okay, what it says: service organization services are part of the user entity's information system. Okay, and relevant to the financial reporting if these services affect the classes of the transaction in user entities operation, procedures with the information technology or the manual systems, okay, related accounting records, user entities information system captures the events and conditions that are significant to the financial statement, or it is impacting financial reporting process, control surrounding journal entries. If any of the thing is happening, okay, then I would say, okay, the service organization, services are impacting my financial statement. Yes, Pooja.
Sir, if the services which we have outsourced to the service organization, which is working under my supervision and direction, in that case also, do we have need any need to apply this essay?
See, if they are working under my supervision, when I say supervision, let's say the data comes to me. Let's say they did the whole payroll calculation. For example, I'll take an example of payroll. So there are 100 employees. They calculated, okay, this is the attendance, this is the basic salary, this is the PF ESIC should be, the TDS that is required to be deducted, and this is the net pay. And the file comes to me. I do a sanity check, I do arithmetic check, and I process the file. Now this is the supervision you are talking about, or supervision is I do the recalculation of the file, I get it approved within the company itself. Let's say I perform it, my manager reviews it, and then it goes for the processing. So what kind of supervision it is?
First one.
So when it first one, I'm just doing the arithmetic accuracy, but still I'm relying upon the work performed by the third party. In that case, yes, whatever controls are there with respect to the payroll calculation in the third party will be relevant for me. And the auditor has to review those controls. But if it is the second scenario where whatever data is coming to me, I will reperform, and within my organization someone will check my reperformance, and then they will issue or pass the entries or issue the payments as per to the employees. In that case, doesn't matter what data I am receiving from the third party, because the process is being repeated in the organization, it is being reviewed in the organization, and in that case, although I have a third party, but it is as good as I am not having a third party. So in the first case, the first scenario that you pointed out, like I'm doing a supervision, or kind of I have something to complement that. So my activities will be complementary in the nature. That's why there is a term that we will be using in this essay itself, or understanding of this essay, is the you can say complementary controls that are there in the user entity. Okay, so these are the complementary user entity controls that they complement, or they are in addition to whatever controls are over there, but they are not the controls on a standalone basis that I should rely upon. I hope you understand the point. So first thing we understood, that when this essay is applicable, that if something is impacting the financial statement which is being performed at the user entity or third party level, that is a service organization, okay, in that case it is necessary for me to consider the systems, processes, control discretion of the service organization, and then I may go for the type 1 report. Then only it's advisable to go type 1. If the same controls are present over here in my organization, why would I go for the type 1 report? I would check the controls here, I would check the design of the controls here, I would test the controls here, and then I will conclude. So this is a very important table, I would say, which talks about that, okay, when a service organizations services are part of user information system, and if they are part of your user information system, this essay is applicable. Clear? So we understood the complementary user entity controls. We understood, okay, when this essay is applicable. Now it's time to understand the type 1 and type 2 report. Okay. So when I talk about the user entity system, yes, Jenny.
Sir, I just think that the outsourced party to which the company has outsourced his data, the auditor will select that outsourced party or the company, and if the company will select and the company will reperform the all the data, then how auditor will rely on the reperformance, that it will be correct or not, whether it will be negligence upon the auditor.
Okay, so see, the service organization in this particular case, if I talk about this particular example, here for me, ABC Limited is an user entity. Okay, ABC Limited is a user entity and XYZ Private Limited is a service organization. Now here ABC is the one who has selected XYZ, not the auditor. I have
Yes,
not
sir.
selected XYZ Private Limited.
Yes, sir.
Okay, now coming to the data that is being reperformed by the ABC Limited. If some activities are being performed at the ABC Limited, then it will be a normal, then I will check as a normal audit. See, from where the data is coming is important for me. Let's say ABC's HR is giving data to XYZ and XYZ is again giving back the data to the HR and HR is reperforming that activity. For me, the step is data going out of the company to XYZ and coming back to the company is irrelevant because the same data is within the entity and that data is being reperformed by ABC to get the same conclusions or whatever conclusions they want.
If
Yeah.
If they have made any error, fraud, or anything, or any mistake, omission, anything, then and the company will also get into it. Then how auditor will save himself?
Okay. See, let's say ABC is performing payroll calculation. They calculated the payroll and at the end they identified, okay, XYZ performed an incorrect calculation.
Yes.
So they will post correct one because they are reperforming.
Yes.
For me as an auditor, whatever work was done by XYZ Limited, is it relevant? Because at the end what got posted? Whatever calculation was done by ABC.
Yes.
Let's say reverse the scenario. ABC did the correct calculation. Oh sorry, XYZ did the correct calculation, but ABC did a wrong calculation.
Okay.
And ABC posted wrong entries.
Yes.
Now in this case, I will say that okay, when I will do the auditing, it's my job to identify okay whether the processes that are there at the ABC's level, that because of which they are posting the wrong entries, are operating correctly. In this case, I will say no, they are not operating correctly because ABC did a wrong calculation and a wrong posting.
Yes, sir.
It is not relevant for me what XYZ did because at the end wrong entries got posted.
Yes, sir.
So even though XYZ Private Limited, the service organization performed the correct calculation, but it did not impact your financial statement as a user entity.
Okay. At the time of auditing, once the auditor will check, na.
Yes. I have to check whether whatever XYZ Private Limited is performing, whether it is getting impacted, whether it is impacting your financial statement or not as a user entity.
Yes, that's this is only my question.
Yeah.
Actually, I was on relevant part that the auditor will rely on the data. That's why I've got confused. Thank
So
you, sir.
first I will check whether the calculations are used to post the entry or whether the end user entity, that is the ABC Limited, are doing their own calculations. If whatever calculations is done by a third party that is not impacting my financial statement irrespective of the outcome, then I will not invoke 402.
Okay, sir. Thank you, sir.
Thank you. Any other doubts with respect to this one? Applicability? Any doubts? Okay. If no doubts, then let's understand type 1 report now, which is there on your modules for 2.42. Okay, and that is very good chart that we should refer. Okay, the type 1 report. Now the type 1 report is a report wherein you have a description that is prepared by the management of service organization, and what they provide in that particular description is the organization system, control, objectives, related controls that have been designed and implemented at a specified date. Okay, so again, so there is some organization system, control objectives, related controls, and how they have been designed and implemented at a specified date. That is prepared by the service organization. Number one, that is the first part. That is a part of my type 1 report. Second thing is a report by service organization's auditor. That is service auditor. So whosoever is doing audit of XYZ Private Limited, XYZ, in this example, XYZ Private Limited was the service organization. So whosoever is auditing XYZ Private Limited, a report from that auditor. I am the auditor of ABC. I will not issue type 1 report, but auditor of XYZ Private Limited will issue a report that the description of the system, control objectives, related controls, okay, are suitable with respect to the design, and they achieve the objectives. Means whatever management is saying in the type 1 report in the first part is perfectly fine, and they are designed in such a way that they are achieving the control objectives. So whatever purpose they have designed, that is being achieved. Means type 1 report will include a management description and the auditor's reasonable assurance that whatever management description is there is perfectly fine. And why I need this type 1 report, we will understand. Just remember one thing. Type 1 report, as of now, park in your mind that type 1 report is on a specific date. I will get a report that will be on a specific date. So whatever system, controls, reasonable assurance, design, implementation we are talking about on a specific date, not a range or a period. Not on or not for a period. Okay, so that's why we only talk about design of the controls, and implementation of the control. If you see the wordings, we never talk about operating effectively throughout the period. That wordings are not there because we are talking about a specific date. How can we say that when the report is of a specific date, how can you say that that they were operating throughout a period? Simple example, if I have a net worth report as on 31st March, if I issue a report that net worth issued on 31st March, okay, net worth as on 31st March 2024, and another report that is net worth maintained during financial year 23-24. Are these two reports same? Tell me one thing. Are these two reports same?
No.
Both are different, sir.
Both are different. Both different. Both convey different things. Yes or no?
Yes,
Whether
sir.
they both convey different things.
Different.
Yes. Now, if I have to convert this into type 1 and type 2, this is my type 1 as on, and this is my type 2. Kind of similar example. Okay. Not net worth related, but this I'm just giving you example that this throughout the period when I'm talking about, that is something covered in type 2. But when I talk about this particular date, this is So on a specific date, I'm talking about specific date. That is similar to type 1 report, because type 1 report gives you on a specific date. And when I convert that type 1 report, okay, into a report for the period, so you have same thing which is there in the type 1, like description prepared by management of service organization of control objectives, related control, design, implementation at specified date, or throughout a specified period. Now we are talking about period. Okay, and in some cases operating effectiveness throughout a period. Now we are coming to the period term. Instead of a specified date, now we are coming to the period term. Okay, and a report conveying reasonable assurance. On the one side, I have suitability of the control design, control, objectives, related controls. Okay, so that was there in the type 1. But if you see, and this part, and operating effectiveness of the controls, that is new, that is about the period. Operating effectiveness throughout the period. Again, a description of the service auditor's test of the controls and results thereof. See, when I say design, I'm just doing a design testing. But to understand and to achieve, or to comment on the operative effectiveness as in service organization's auditor, I need to do more testing. Then only I would be able to say, okay, throughout the period the controls were operating effectively. So as in service organization's auditor or a service auditor, I have to provide that detail, okay, what testing I have performed. So when you add the period, the operating effectiveness, and the tests that were performed by the service auditor, it becomes type 2 report. So that is your type 2 report for a particular period which shows about the operating effectiveness. Clear? Any doubt with type 1 and type 2 report? Any doubt? Yes, no? Okay.
Sir,
Yes.
sir, whether the user auditor is under any responsibility to recheck or re-perform the whatever work that has been done by the service organization is correct or not?
If the in type 1 or type 2 report, you already have a assurance by a service auditor. It is same like you are relying upon the audit report of another auditor. So do we perform any testing when another chartered accountant issues a report to us on that report?
No.
Same way, because this is also the same kind of report where the reasonable assurance is given. I will rely on the report. I will not perform any further testing, and I will when the service auditor is has issued that report and he is a member of institute, I will rely upon that report. There is no need to doubt on that report and perform further testing.
So what if he is not a member of our institute?
In that case, you may also connect this particular part when I'm talking about using the work of another auditor, kind of, but not in that way. But when let's say for example, the user here, the service auditor is not the member of institute, or let's say this third party is not within the India itself. Okay, is not in India, let's say. So they are somewhere outside in another country where they appointed third party auditor, not related to the member institute over here. I don't know what audit he did and what testing he performed. In that case, before relying on the audit, I need to check whether the service auditor is having that much professional competency, okay, and independence to perform this kind of audit. Number two, the standards under which the type 1 and type 2 report is issued. Now, what is the standard I'm talking about? So, that is also a point when I will be, talking about using the type 1 and type 2 report. It's not just like that, okay, we got the report, matter over. There are certain things that we need to look into. So when I talk about standard, can anyone tell me the standard that is applicable to issue the type 1 and type 2 report? To rely, there is a 402. But to issue the report, what is the standard? Can anyone tell me what is the standard? If I want to issue a type 1 or type 2 report, which standard I will follow? Okay, Vignesh. Let's say assume this service auditor is a part of, he is a member of institute. Now, let's say I am the service auditor or you are the service auditor. Some user entity auditor has approached you and asked you the report. Under which standard you will issue this report? Anyone?
So this type 1 and type 2 report are of a kind of management reporting. That
I'm
service.
giving a reasonable assurance. If you see, there is a reasonable assurance that is part of that report. So if I'm giving a reasonable assurance, kind of assurance, then I have to follow the standard. Now the question is, which standard? Anyone? No, I'll tell you. And we will see in the coming lectures also. Okay. That is SAE 3402. That is the standards on the assurance engagement other than audits and review. You also have a chapter on that where we will be discussing SAE 3402 that talks about assurance reports on a control at a service organization. Okay. Now, when as a service auditor, I want to issue type 1 and type 2 report, I need to use or I need to follow this standard. So when I'm using a type 1 or type 2 report as a user entity auditor, as an auditor of ABC Private Limited, ABC Limited. If I'm the auditor of ABC Limited and I received the type 1 and type 2 report, I will check whether it is issued by the institute's member. If not, then which standard has they used to issue the report? Because as a member of the institute, I will use SAE 3402 and then I can rely on the report perfectly fine. But if the report is issued from somewhere outside India or by someone else who is not the member of institute, in that case, I have to do some procedures before relying upon the report. It's not SA 700, it's not SA 705 because that's not the audit report I'm talking about. To issue type 1 and type 2 report, you need to use SAE 3402. And we will see that when we will discuss SAE 3402. Clear? Any doubt till now? Okay. Now, we were talking about type 1 and type 2 report. We understood, okay, this is a type 1 report, this is a type 2 report. Now, we also saw that, okay, if it is being issued by the member of institute, we can rely upon the report. But what if it is not issued by the member of institute? In that case, we have to, before using the report, we need to do something. So let's understand that. It is the using a type 1 and type 2 report. And I'm using this report to support my understanding of the service organization. Okay. To support my understanding of the service organization. So, okay, before I go to the using of type 1, type 2 report, tell me one thing, is it necessary to obtain type 1, type 2 report when I'm using a service organization and their financial transactions are impacting my financial statement? Let's assume this part is not there. Let's assume this part is not there. ABC private XYZ private limited data is directly posted as an entry. Okay, so the functions that are performed by the service organization are impacting my financial statement. Is it necessary to obtain type 1, type 2 report? Okay, Vignesh. Good, Hemant. Anyone else? When the service organizations operations are impacting the user entity's financial statement, as an user entity's auditor, am I required to obtain type 1 and type 2 report mandatorily? Yes, no, with the reason.
If there are any mechanism or control at the user entity itself, which checks the significance and their materiality, or say their appropriateness of the work performed by the service organization, and through this mechanism, if entity provides us the sufficient and significant information on which we can rely, then in that case we can accept that information. And if we are not able to obtain understanding of that thing, then we are under obligation to take this type 1, type 2 too.
Okay, so just to simplify, okay, let's say I'm obtaining the understanding of the user entity. I'm the auditor. ABC Private Limited is a user entity for this example. ABC Limited is the user entity. Okay. Now, as an auditor, now auditor is, let's say for example, Mr. Harshad. Hypothetical example. Okay. Now, when I am as a Harshad, I am understanding the user entities, controls, business process, and all those things as per SA 315. So what I'll do is I'll obtain understanding of the user entity, obtain understanding of ABC's limited business process and controls as per SA 315. I'll obtain that understanding, okay, as per SA 315. Now, when I obtain this kind of understanding, okay, what controls you have, what business processes you have in ABC, and if I get sufficient understanding, okay, if I get sufficient understanding, plus I identify that internal controls relevant to the audit are there. Okay, so internal controls are there. Okay, internal controls relevant to the audit are present. Then perfectly fine for me. But if I'm not able to obtain if I'm not able to obtain sufficient understanding, okay, then you are saying that I should use a type 1, type 2 report, correct?
Yes, sir.
Okay. Does anyone has different answer from that? Different answer from the chart that I have prepared? Anyone? Okay. No? So understand one thing. It is not mandatory for me to rely on the type 1, type 2 report in this scenario. It is not only option available to me. There are other options also available to me. Other option is I may contact service organization, okay, and obtain information that I require. Okay, if I require specific information, I may contact service organization. I may visit service organization, okay, and perform procedures over there. Which may provide me necessary information about the controls, how they are operating. Instead of relying someone else's report, why can't I go and perform the testing over there if they allow me? If they allow me, I can go and I can perform some testing. Or else, there is one more option. I'll continue on the next page. I will appoint someone else to perform procedures on my behalf. Example, as an auditor's expert. Then I may use, some other essay that relying upon the work of auditor's expert. I can do that. If I'm relying upon the work of if I'm using the work of an auditor's expert, I may use SA 620. Why should I go for type 1 and type 2 report? So it is not necessary to obtain type 1 and type 2 report. Understand that. I have different options available to me. But if I choose this option, then I need to think of, okay, how to use that report. Clear? Any doubt? These are options available to me.
Sir, these type 1 and type 2 report has to be issued by auditor and to be included in this independent auditor's report.
Sorry, can you repeat your question again?
Sir, these type 1 or the type 2 report has to be included by auditors in his independent auditor report.
No.
It is for
No.
internal purpose. Sir, to whom is to be issued?
See, type 1 and type 2 report are issued by the service auditor. They are issued to the people who require it. Okay, it's kind of, to whomsoever it is required, but usually it is, to issued to a specific set of people. Okay, that it is addressed to the management, but it is circulated, or it is given to a specific set of people. That okay, if you need it, you can use this type 1, type 2 report, where the auditor has certified that provided reasonable assurance. But that doesn't go as a part of your audit report. Now, if I give you a simple example, that was net worth certificate. When the auditor issues a net worth certificate, do we include in our audit report? Answer is no. This is some other report that has been issued by the auditor, has nothing to do with the financial statement of the company, or not part of my statutory audit. Same way this type 1, type 2 report is there. Am I clear? Do you have, did you get the answer?
Yes, clear.
Yes, Jenny.
Sir, in this second option, visits service organization, you have told if the entity, if the service organization allow me to visit over there, whether it can, यानी वो हमें मना भी कर सकती है?
Yes, yes. Why someone will allow you? See, there are both type of organizations available. Let's say tomorrow XYZ Private Limited says you, okay, we do not entertain. Because I'll give you one hypothetical example. Like it's a real example only, but understand, let's say XYZ is not only providing services to one entity, but there are multiple such, user entities to whom they are providing the service. Now, if every entity's, auditor will request, okay, allow me, how many auditors request they will accommodate? In that case, it will be a problem for them. So they might not allow you.
Actually, I have connected this with the entity will disallow, then सॉरी सर मैं एक्सप्लेन नहीं कर पा रही
नहीं बोलिए ना, कोई इशू नहीं.
यानी
तो
कि मैंने इसको इस तरीके से कनेक्ट कर दिया था कि अगर सर्विस एंटिटी हमको अलाउ नहीं कर रही है तो वहां पे उनका कोई अलग इंटेंशन हो सकता है कि हम यानी आपको अलाउ नहीं करेंगे ऑडिटर को आने के लिए.
Generally, it is not like that because we entities have to provide this kind of. This is part of the agreement. If I'm outsourcing the work to some other entity, it will be always part of the agreement, standard agreement, that if my auditor requires something, you have to provide it.
Okay, sir.
Yes, Pooja.
Sir, while obtaining such information from the service auditor or having contact or in communication with that service organization, do we need to have any permission from management before taking that?
See, usually communication is required to those charged with governance and the management that we are going to do that. But I don't think so any permission is required. Reason because as an audit procedure, I am just only required to communicate, okay, when I will be developing my audit plan, audit strategy, when I will be communicating the whole audit strategy, over there I will communicate to them that I am going to rely upon the type 1, type 2 report, and that's why I will be asking them. Okay. Or either you may ask them and provide us. But as in permission, I don't think so anything is relied as a permission.
So if I don't communicate with management, even then, will it be allowed?
In that case, you'll be violating SA 260, that you are not communicating your audit plan and time and extent of the audit plan. Because if I'm relying upon something like, okay, if I'm going to use my type 1, type 2 report, if I'm going to include that in my audit plan that I will be using that report, I need to communicate it as per SA 260. Anyone else? Any doubt? Let's extend the session for 15 minutes more because of technical issues. We were not able to get that time in the start. Okay, I would request everyone to extend the section 15 minutes more. Let's continue and understand few more things. So when I talk about using the report, let's say other options are not available. Contact, service organization, visit, appoint someone else is not available. When I'm talking about the only option available is using type 1, type 2 report. In that case, we need to understand factors that are important while using type 1 and type 2 report. Okay, so we need to understand that factors. Number one is we need to understand professional competency of service auditor. that what is the professional competency of the service auditor, okay, and whether whether he is independent of service organization. So I will understand the professional competency and the independence or his independence with respect to the service organization. It should not be the case, okay, director is issuing me type 1 report. I will say, okay, how then I rely, because director will, kind of, is a management, part of management also is giving me reasonable assurance. It's a conflict of interest. So in that case, I need to understand whether he is professionally competent and independent to issue this report. Then I will check, okay, if he is, competent and independent to issue this report, which is the standard under which this report is issued. Why this is important? Reason, because let's say this report is issued in XYZ country. Over there is some other standard which is required to be followed while issuing this report, and that standard says that provide bare minimum details in the report. Do not include the things. For example, the standard says that when you are issuing a type 2 report, do not provide details regarding the operating effectiveness or the testing you have performed. Or that standard says that provide type 1, type 2 report, but not with the reasonable assurance, but with the limited assurance. So I need to understand under which standard this report is issued, whether this is relevant to me or not, whether the standard has certain requirement which makes this report irrelevant to me. So I need to understand the standard also. Now, these things are not applicable when the auditor is member of the institute. Not relevant when service auditor is member of institute, because at that point in time I will rely, because this is something report issued by the member of institute as good as other reports which are issued by the member of institute. Okay, and this part talks about that sufficiency and appropriateness of the type 1 type 2 report, or the audit evidence that I will receive from the type 1 type 2 report. Perfectly fine. I understood, okay, whether type 1 and type 2 report are supposed to be relied or not. Okay, I understand their genuinity, integrity of the report, and their usability. They can be used. Should I use now this report? If I verify these things, I'm fine with the all of these things. Should I now use this report? So I'm talking about here is sufficiency and appropriateness of the report. Anything else I am required to look into this? Anything else do you think might be as a user entity auditor I should look into this?
Sir, if service auditor is member of our institute, then we are not under any responsibility or requirement to check his work or any professional competence.
Yes, that I added over here. Yeah, it's an exception, you can say. That if the service auditor is there, then is a member of institute, then I will not look into. But apart from this sufficiency and appropriateness, am I required to look into something else? Anyone? for a minute. Are you going to check something else when you get the report or not?
Independence also.
Independence is over here. It is part I have included.
Materiality.
Okay. Like how materiality, can you explain something on that? What in materiality?
Whether it is significance or not.
No, might not be relevant.
So can you repeat your question again?
So apart from sufficiency and appropriateness of the report, or apart from this, whether the person is a auditor is a professionally competent, independent, which standard is has been he has used. Apart from this, am I required to check anything else? Very good, Hemant. Anyone else? Okay, I'll give you an example. Audit of ABC Limited is for FY 23-24 and type 1 report is issued on 31/12/2023. Now tell me, what is the problem?
We have to check that period which is covered by the report.
Absolutely, yes. Period. Whether the period that is there in the report is the same that I need as an auditor. It may be issued on some other date. Let's say if it is issued, let's say type 2 report. Type 2 report is operating effectively. What if it's something outside India, they use some other financial year. They use the calendar year. The report is for the calendar year. Now the next big question comes to me is about the relevance of the report. Relevance of the report, which may include the period for which the report is issued, and very important part is whether these the evidence that I'm getting by the report is relevant to me, means the description, controls, system, or even report is relevant to my audit. What if the report says that there are no control at the service organization? There is a type 2 report and it says the controls are not effectively or not working effectively, or there are no controls. Is it relevant for me? The design, the system descriptions, the controls that are there, relevance is missing. So one is the period, one is the relevance of the report. Whether the control, the outcome which is documented in the report is relevant for my audit. Let's say the report says that there are no controls on this area, or the controls are not operating effectively or not designed appropriately. Or let's say I have outsourced as an ABC Limited has outsourced tax related functions. but the report only covers control around payroll related outsourcing functions. Is that report relevant to my area for which I am looking for? Relevance is necessary. Are you getting the point? And if I'm checking all these things, why can't I, there is one step ahead I will go, and I will also check user entity, complementary controls. Complementary user entity controls. And we have discussed, remember we discussed sometime before that when what are user entities complementary control or complementary control of user entity. Basically these are the controls which help the controls which are already there in the service organization, kind of. Clear? Any doubt? So I'll come to the module. Okay. So when I will I'll explain, Hemant, with an example, user entities, complementary control. So if I have to give an example is, let's say, payroll calculation is performed by ABC Private Limited, sorry, XYZ Private Limited, my mistake. The calculations then are shared with ABC Limited. ABC Limited performs trend analysis to check reasonableness of payroll payment. For example, last month when the calculation came to me, it was, let's say 4 lakh rupees of total payroll payment, salary and wages. This time I will again check, okay, what was the last time I paid or throughout the period I am paying. On an average every month 4 lakh. Now also check, it's 4 lakh, fine, I'll process it. So the control of performing trend analysis is the complementary control, which is there at the user entity, because ABC Limited is performing that control. Any doubt? Yes, Pooja.
So my doubt is not related to the current discussion, but I would like to ask that.
Yes.
So if auditor decide to use that type 1, type 2 report, and if that type 2, type 1 report is a basis for his modification to the opinion, then he is it required to mention that type 1, type 2 report that he has used?
So it's basis of the modification. See, it is very rare that type 1, type 2 report will be become basis of a modification. Very rare. Because if the type 1 and type 2 report are, let's say, when the service auditor has issued that report and he qualified the report, I don't think so management will then, circulate that report. If even, let's say, management is circulating that report, I as an user auditor, I will get that report. I will not only rely upon that report. Okay, what they are saying is, let's say they are saying that, the controls around the payroll are not working efficiently or they are not relevant. I will not stop at that particular point in time as an user auditor. I will go and perform substantive testing to gather more audit evidence. This is something as a part of audit evidence. But if I'm not getting audit evidence from this particular procedure of type 1, type 2 report, I need to perform alternate audit procedures to get more evidence. For example, more testing of payroll. To recalculate the payroll, I will perform the recalculations, reperformance, and then if I identify some observations, I will quote that okay, I performed the recalculations, reperformance, and these are the observations. Directly modification on the basis of report, I don't think so that will be there. Did I answer your question, or do you have any
Yes.
further doubt?
So further doubt is also there.
Yes.
Model has mentioned that there is any regulatory or law requirement to mention that thing that you have used type 1, type 2 report. Can you give me just an example where this can happen, sir?
Sometimes it happens when you are doing a bank audit or a audit of a regulated entity, where if you are relying upon some other reports, you need to specifically mention in your, because when it, let's say it's a bank audit or is some other different type of audit, okay, there are other reporting requirements also in your audit report. Like for the bank, you already have a long form audit report, so there are multiple things that you are required to mention. In that case, if the law requires you to mention, then you have to mention.
Okay, sir.
Any further doubts? Any doubts till now? So we discussed till now, if I just summarize, we discussed, okay, when this particular essay will be applicable, okay, the scenario. Second, we discussed about when I will rely upon or when I will use type 1, type 2 report. We discussed what is type 1, type 2 report. Okay, I have options available, but if I choose to rely upon type 1, type 2 report, what things I need to check? This is what we discussed till now under SA 402. Any doubts till now? Okay, if no doubts, what I suggest is we keep till here. There is something 10 to 15 minutes more, okay, and plus the questions I will take up in the next start of the next lecture, and I will then start the chapter 3 also. So in the next lecture, I will take up some part from this and chapter 3, okay. So please, I would request everyone to read the chapter 3, okay, and revise whatever we have discussed today. Okay, guys? Okay. If no further doubts, then thank you guys. Thank you for joining today's session, and apologies for the IT issues and interruptions. I will see you in the next section. Thank you. Yes. Thank you. Good night.